Real world asset tokenization might be the end game for DeFi and blockchain. As far as institutions go, um, institutions are interested very much so in tokenizing real world assets and moving them on chain. This move would dramatically improve the current financial infrastructure that is being used by banks and the like. Citigroup, who has run their own blockchain, they released a comprehensive document about asset tokenization and all of the advantages. JP Morgan has forked Ethereum and released a document of their own. This one was focused on retiree portfolio management, which is a multi-trillion-dollar industry. And I've covered stories on my channel about institutions utilizing public blockchains such as Avalanche, Polygon, and Axelar. Ripple, remember Ripple, was created specifically for bank-to-bank transactions. So let's talk about RWAs and where the opportunities lie for retail, such as ourselves, and we'll talk about some tokens that might have the potential to lead the way in this exciting crypto category. Blackrock is really not interested in meme tokens. JP Morgan, not so much interested in the algo stables. And I promise you that Fidelity is not interested in buying monkey pictures, but they are interested in blockchain. So welcome everybody. Joe here for the KPOD network. Usually I'm over there by myself on my own channel, but now I'm here, part of the KPOD team, and we're going to collaborate, churn out as much useful content as we can for you, the retail investor, the retail trader, the end user. And we're just going to give it to you, firing from the hip the way we see it. We're not going to spin it. We're not going to sugarcoat it. We're sure as not going to hype up anything that doesn't deserve the hype. Just the way we see it, that's what you're going to get here. Thanks for tuning in. If you're not a member already, please subscribe down below. So let me do a quick TLDR about real world assets and what they actually are, what they actually include. RWAs, right, tokenized real world assets, are physical assets that exist in the real world, but now they are being represented by digital tokens on a blockchain, and these tokens are smart contract capable. RWAs include anything from real estate to artwork to patents, copyrights, bonds, commodities, and machinery. Stocks have already been attempted to serve as RWAs on chain. Precious metals, things like that. Maybe you've seen Mirror Protocol on Terra, and there have been a couple of others. So tokenized assets are basically a representation of something that exists elsewhere. It's represented as a digital token. I mentioned smart contracts. These smart contracts would be able to automate transfer or spending of that asset. And the blockchain-based version is the new asset. It's the digital twin. The real-world version is kind of frozen in place while the digital asset takes on the life of the original. It can get traded, leveraged, and all that. Now, up until this point, there have been a lot of risks. Different DeFi protocols have attempted real-world assets by having some type of algorithmic peg. There's been tons of regulatory risk. I've been told by a specific lawyer that I talked to, he says that the regulatory advancements still need 4, 5, 6 years, right? The technology is there, the infrastructure is there. Regulations are a problem for real world asset tokenization as a sector in crypto. And then of course, up until this point, there's been, typical market liquidity risk, smart contract risk, and all that. Finally, the assets themselves, they need to be verifiable off-chain. So I'm sure there's going to be a whole industry set up specifically dealing with, custodying these assets or having some way to verify that they exist on some bank or company's balance sheet or ledger of some sort, right? That's going to have to happen. Otherwise, it's not really a real world asset, right? Why are banks interested in this and not so much interested in everything else so far that we've seen in blockchain? Well, banks and other institutions, they see blockchain as a way to cut costs, and they're going to be able to cut a lot of costs with this super fast, almost instantaneous settlement that blockchain allows. Um, they're going to be able to eliminate lots of middlemen along the way. They're going to upgrade their infrastructure. Like I mentioned, it's very outdated. I believe it's, 60, 70 years old at this point. And by moving these transactions, these assets on chain, they're going to automatically have a ledger where multiple parties can look to verify transactions, right? This is helpful for accounting. After all, blockchain is really an accounting tool, and also compliance, right? It's going to make things a lot better for compliance. Finally, let's not forget, you move stocks, whatever on chain, you're going to have 24/7 trading done by the code, right? Automated by smart contracts. This is going to jack up the volume that financial institutions are accustomed to by, trading, 8 to 4 only certain days of the year. And they'll be able to collect fees 24/7, which is great for them. This is pwc.com, and I wanted to highlight this here. Get rid of these messages. It says regulators around the world are showing a deeper understanding and comfort with the process and security safeguards. So regulatory compliance is going to be a big issue. That's going to come hand in hand. Some of this stuff is probably only going to occur on permission blockchains. That's just how it's going to be. And like I said earlier, there is this feeling that regulations are 5 years behind the actual blockchain tech. We might be able to close that gap once we have governments more on board with the idea of tokenized assets and having this kind of open system where multiple parties can transact, can verify, and can hold assets. This article talks about 3 ways tokenization can create value, and it seems like they're talking about create value for the institutions, not for necessarily for retail. Citigroup, they're all leveraging blockchain. They're all not going to use Uniswap, and they're all not going to use Osmosis or whatever. They are going to use maybe their own infrastructure based on what's been public. Some of this stuff will be permissioned. Maybe all of it will be permissioned for the most part, and it will all be compliant. And it will all have the assets verifiable off-chain, which is, I know a lot of you don't want to hear, but that's the reality of it. Now I know this is a crypto show, so let's talk about the crypto stuff. What tokens can get you involved in this real-world asset explosion that's, it's imminent. Well, this is CoinGecko. I ranked the sector by market cap. It's got Chainlink at the top of the list, but I don't consider Chainlink to be a pure play in real world assets. I would consider Mantra, Ondo, and then XDC network as the main movers and shakers right now. Obviously, we've got these others that might, you might have your eye on already. I know I've heard Pendle many, many, many times. A couple others down, Origin Trail. So I've heard of these, but we don't have time to look at every single token. You want to do it, do you? I'll get you started with an overview of Mantra, Ondo, and then XDC so you can see where they're at. Looking at Mantra here, token absolutely rocketed from like 15 cents to $7.50 the last 1 to 2 years. And you could see right here, it's a purpose-built L1, so it's basically an app chain that's going to focus on real-world assets. They use the Cosmos SDK, which makes it IBC compatible, and it will have access to all the other bridges that interconnect Cosmos with Solana, with the various EVMs and others. But you could see here, capable of adherence and enforcement of real-world requirements. Guys, this is not going to just be no holds barred. Everybody with a little bit of Bitcoin or ETH is going to go be able to gamble on these things. This is serious finance moving to the blockchain. And I just pulled this article from January. They're tokenizing, or they've agreed to tokenize $1 billion of real world assets for a UAE property firm. Right now, Mantra really doesn't have much TVL. It's like $5 million, something like that. It's basically nothing, right? If you're talking real world assets, you're gonna expect that in no time, some of these platforms, if they gain any kind of traction, are going to have billions and billions and billions of TVL, and not just stablecoin TVL, actual variety of different assets. And the company they're working with These are real estate development firms, hospitality, data centers being an interesting one. And they already started with crypto payments. UAE is kind of crypto friendly compared to the United States so far. But look at this. Donald Trump, at the time president-elect, said that DMAC laid out plans for a $20 billion investment in data centers. And you'll see Trump family and some of these real world asset firms are very familiar with one another. And for me, the takeaway here is that this article says, announced by Mantra, this is going to happen early in 2025. So this could be, a couple of weeks. You'll be seeing more traction here. Interesting showcase of the Cosmos SDK. Mantra's not calling itself an app chain. They're calling themselves a purpose-built L1. Kind of distancing themselves from the ecosystem, but also happy to use the Cosmos tech. Interesting move, probably the right one. Here's Ondo, and the Ondo thing is interesting because they're already cross-chain. Mantra. It seems like Mantra's going to build their own blockchain, and they're going to bridge everyone to them. Ondo has kind of scaled outward to put these different. I don't know if you want to call them outposts or what, but the token. The contract here says it's on Ethereum, but I know that they're on like 10 or more blockchains. And here's their website. You see a trend here. This is like real finance. This is not like dark mode, a quote, and then a bunch of links to connect wallets. I mean, if I click sign in here, I'm using my email, like Web2, and I think that's what people are going to have to get used to. This is what adoption looks like. DeFi failed miserably at onboarding the masses with pathetic attempts to make the UIs more friendly. The UX has always sucked. I said for a long time, banks are going to just take the technology and make it their own. These platforms or protocols or teams, whatever you want to call them, like Ondo and Mantra, they're going to kind of meet Web2 and TradFi where they're at, it looks like. And yeah, you see they're on 10 supported chains, 50 different projects. This is a little bit more mature in terms of actual activity compared to Mantra. Mantra kind of just getting going. And they've got almost 1 billion TVL, which is, this is respectable for this kind of budding sector of crypto. And I did do a little research. Looks like right now they're mainly focused on stablecoins for the most part. But as regulations become more clear, you're going to see fractionized real estate, you're going to see tokenized equities, you're going to see commodities, and all those wonderful things we see in the TradFi world. So that's Ondo. That's a good one to keep on your radar if it's not already. And finally, let me hit XDC network. Didn't even know this one existed until I started doing this video. But look, kind of like Mantra, they've been around for a while. Token was like 1/10 of a penny. And then it rocketed up in the last cycle. Don't even remember this one being on my radar. But it's pretty impressive that they're almost back to previous highs. I don't know what accounted for this this massive pump when RWAs really weren't a thing. Maybe they've pivoted since. But long story short, this is another one that's going to be working on cooperating with regulators, having a platform that's compliant, and servicing Web 2 and Web 3. Let's take a look. You could see that they are their own decentralized smart contract platform. So the trend here for me seems to be build your own chain, right? And get the activity to your chain however you can. Mantra, they're going to leverage all the different bridges. Ondo actually built out to all these different chains, but I believe they are building their own chain. Maybe they'll route everything through their own chain. I think that's probably better for compliance, to be honest with you. They'll get to know their own validators, and maybe there'll be some regulations that affect validators, which I would not be surprised if I saw coming soon. But yeah, XDC, its own decentralized smart contract platform, and they say they're enterprise friendly, right? Traditional finance, payments, and the like. They have their own token, like I just showed you, and you could see this is kind of a high performance blockchain, right? 2000 TPS. That's okay to start out with, but obviously that's going to have to go up. Super low fees and EVM compatible. And you could see here, looks like they're going to target US tokenized treasuries. They call it a straightforward way to intersect TradFi and digital assets, typically backed by an ETF with a large brokerage house. And now we're going to see these. We're going to see these on chain. In 2023, the total market cap of treasury products was 100 million, and now they're looking at 1.5 billion. Just 2.5 years. A year and a half later. There's also some mention here of private credit. So you will see all sorts of real world assets. We didn't even talk about carbon credits, but we could talk about that one in another video. But since you stuck it out for so long, I'll throw you a small cap, unknown gem. Appreciate you sticking it out. Check this. Here's one called Fermion. All right, got this from another content creator. Appreciate it, by the way. You know who you are. High value physical RWAs fractionalized, right? They're showing a watch here. I personally would not buy a 1/100th of a watch token. Maybe that's you, but that's not me. You could put your email in here and I will link it down below where you could check out this public sale. We're going to see lots of these little projects spring up, just like we did for DeFi, just like we did for memes and all the others. But it looks like this is coming up in a couple of months. They've laid out the tokenomics. Look, that's a fancy bar pie chart if I've ever seen one. There will be an incentivized testnet, and they talk a little bit about the token here. They brag about some partners. I mean, Brinks, that's a good one, right? So RWA is able to kind of mesh TradFi and the TradFi infrastructure, which is what I would consider to be Brinks, with this tokenized futuristic blockchain world. One reason why this has my attention is because part of the ecosystem they're trying to build is to become a verifier or a custodian of these assets that will be fractionalized on chain. Or just sold on chain as digital tokens representing the original asset. Looks like they're focused on kind of niche products, whether it be watches or maybe art, things like that. And I think there is a market for that. There will need to be someone verifying this stuff, and there will need to be custodians. And if a project like Fermion can kind of do an all-in-one, yeah, maybe it's a little niche if they're tokenizing watches, but if they're also allowing people to become custodians or to become verifiers in the RWA sense, this is like your chance to almost become like a miner, right? Or like a validator yourself and somehow benefit from this Fermion ecosystem. It's worth reading the light paper. I read it a while ago. Just wanted to bring this to you guys. But that's it. Real world assets. Appreciate you guys sticking this one out. KPOD Network, Joe here, you there, and leave comments down below. I know